Anmol Singh. He's a stock trader. He's a young man, grew up in India, left when he was a late teenager, went to school in London. All his mates were getting internships. He didn't get one. It motivated him. He came here to the US and now he day trades. He has two modes, two buckets of trading. One is day trading and the other one's wealth building. But he has courses. He live streams almost every day and shows people what he's doing. Fascinating insight on how to take the emotions out of trading. We mentioned a couple of businesses that I like particularly, and I wonder, why aren't these stocks doing well? I said, well, you have to look at the whole portfolio picture and you got to take the emotions out of it. He's another strong advocate of making a plan and sticking to it. Well, the stock, we said we were going to sell at this price, but it's going up. I'm going to hold out. No good. If it goes below, if it goes high, you set that up, you make a plan and you stick to it. But it's a great conversation on, I ask about crypto, I ask about tech stocks, I ask about the volatility. It's just great insight from somebody who's doing it full time. Really great conversation with Anmol. Fascinating how stocks work and day trading. Thanks for listening and watching. Hi, I'm Joey Pinz, and here's my 45-second introduction. After starting my business in the 90s, I started developing poor habits of eating in my diet because of working way too much. Before you know it, I found myself 340 pounds. The doctor told me if I don't lose the weight, I'm not going to see my daughter graduate. Took the next 7 months, lost 130 pounds. People think there's some secret. Ask me, how'd you lose that weight? Like there's some secret. There is no secret. How did I lose the weight? Just one word: discipline. I've had other successes in life, and I attribute them all to discipline. Now, I'm not the king of discipline, but I believe that it can help all of us. Friends, colleagues convinced me to start a podcast. The podcast mission: how do we better ourselves and society? I talk to interesting people in health, fitness, sport, wellness, business, technology, science, art, and culture. And I eventually ask them how discipline plays a role in their life. Podcast vision: growth through learning from others. Hi, Anmol Singh. Thank you so much for your time today. What does it mean, feeding the ducks?
Feeding the ducks, great question. So, in the stock market, we call it when the stock list is going up and everybody wants to buy it, right? Because they see it in the news and everybody wants to buy it. Your mom, your pop, your Uber driver, everybody starts talking about it online. So us traders, professional traders, we say, all right, let's feed the ducks. So when the ducks start quacking, you feed the ducks. When everybody else wants to buy the stock, we sell it to them. When nobody wants it, then we buy it from them. So we kind of doing the opposite of what most people, do in the stock market.
Yeah, because we always hear tips from wherever, this is a hot one and everything. Yeah, so the term feeding the ducks, that does make sense. What is it about trading that you love so much?
I think many different things, like the first thing is it's like the greatest meritocracy out there. Like my results are not dependent on anybody, right? Like you could have the best job in the world, but your results are still dependent on what the company does, what your colleagues do, what other people end up doing. So you could be doing the thing at the best of your ability, but if other people are not, you could still, not do great. Same thing with a business. Your results are dependent on your customers, your suppliers, your vendors, your employees. In trading, it's me and the computer. There's nobody who dictate my results. So I think that's one thing I like about it. There's no office politics, right? You don't have to talk to anybody. You don't have to get stuck in traffic, and you can travel pretty much anywhere in the world. And, as long as you got your little gear, I call it, which is my laptop and external monitor, my mouse and everything, I travel with it and I could do it from anywhere. Like right now, I'm not at home. I'm in West Palm Beach, Florida. Nice. But I can still continue to, run my business on the go.
In this fast-paced MSP landscape, how do you stay ahead? Introducing MSPinfluencer.com, your ultimate hub for MSP news, insights, and community connection, powered by Forza Dash. More than 75,000 MSPs subscribe to our MSP Influencer Pulse weekly newsletter, staying informed and ahead of industry trends. Tune in to emerging podcasts from Joey Pinz and leading MSP voices, offering essential tips, powerful insights, and success stories. Explore our multi-authored blogs, crafted specifically for MSP leaders, delivering fresh perspectives and actionable strategies. Celebrate excellence with the industry-leading Forza MSP Influencer Awards, recognizing innovation, leadership, and impact in the MSP community. Join thousands of MSP professionals who trust MSPinfluencer.com to grow their business and expand their networks. MSPinfluencer.com, where today's MSP leaders connect, collaborate, and conquer, all powered by the Forza platform, helping MSP vendors work effectively with MSPs and helping MSPs grow. And what do you dislike about it?
Dislike, that is the greatest meritocracy out there. That you can't
Ah,
blame it. That you can't blame it anybody, right? Like if you struggle, if you have a bad day, bad month, bad week, it's just yourself. You can't blame it on anybody, right? So you have to be taking accountability and responsibility for everything. So that's also the best thing, and it's also could be the worst thing for a lot of people.
mm. Anmol, how do you wrestle with Wall Street perception? We have like I know you're a big advocate of not getting emotionally connected to stocks, and so I just think, okay, here's some products, some businesses that I use and that I really like. Why doesn't it doing better? But I guess your point would be it doesn't matter if you like it or not. You're just looking at trends.
Correct. Yeah, you got to look at the trends because the stock is clearly in a downtrend. It's going down. Doesn't matter how great the company is. The stock is going down. And
Mm,
also, it's dependent on where you buy and sell something too. Because you could have the greatest company in the world. Let's say we both together own Tesla stock, right? You own Tesla stock in your account. I own Tesla stock in the account. But our returns are going to be vastly different based on where we bought them. Like if I bought Tesla at $100, but you bought Tesla at $400, we both have the same Tesla stock, but I could be doing really well on it and you could not be doing well on it. So it's
mm,
also upon where you buy things. So it's not just about a company. It's about the price that you paid for that company. Really important. The valuations. It's kind of like properties. You could have bought the property at the height of the market, right? And then somebody bought it in the financial crash. We both have the same property, but our results are going to be vastly different based on the price that we bought them at.
yeah, and I guess okay, so I'll just, I like to go to Costco. Okay, it's
Mhm.
always busy there. It's just, I don't know what it is. The high ceilings, and no, I don't know what it is. I just like it in there, and so, but I guess I'm only seeing it. It's very anecdotal. I'm only seeing it from my perspective. It's busy in there, but how it's doing globally in all its areas, there's no real way to view that. So
Yeah,
when I look
because
at the stock, it's
people,
different.
right? Because people, know that too. So we're not the only ones who know Costco is great. Everybody knows that,
Mm.
but maybe somebody came to that conclusion 5, 10 years ago when Costco was coming out. So they bought it way early. And now we want to buy it
Ah,
because now we see how busy it is because we're already there. But the stock might have already run that up, right? So that's one of the things. Now, in a long enough time frame, I think it's going to be fine. Like if you're thinking like 10 years plus, then it's not going to matter. It's going to have its downswings, but then it's going to come right back up. But if you're looking for returns, okay, what's the return going to be for 1 or 2 years or less? Then you got to really make sure you're buying it at the right prices, buying it on the way down rather than on the way up. Like, Tesla's a great example. When the whole politics and all that stuff was happening,
yeah.
Tesla stock dropped from 400 down to like 100, some $120.
Wow.
Now, somebody who bought it at 400, they are still down on their investment. Somebody who bought it at 100, now they're up 300, 400%. So
Mm,
it really depends. So you got to look to buy them on the way down as opposed to buy them on the way up. On the way up is where we feed the ducks, where we sell it to everybody else who wants to buy it
right.
now. And then when they don't want to buy it, then we buy it from them. And a great example actually is Tesla again. A few weeks ago, when the Elon and Trump had their own little thing, Tesla stock
Yeah.
dropped from 370 down to like 260, 270. And then what happened? People were scared. People were freaking out. We bought it, and then now we're back over 300 again. So I think it
Wow.
really depends on where you buy it.
It's amazing how just some of these it just seems so volatile to me, right? Because yeah, okay, the president and the owner of the company are having a spat or a perceived spat. Who is it a play? Sometimes I wonder, but still, when that happens, tell me the mechanics behind the stock actually dropping. Are people just selling it and it starts to drop? How does it actually physically the stock value drop when something like that happens?
Yeah, I mean, people's got to be like selling. The more people like trying to get out rather than get in, which causes
Ah,
that big drop. And partly it's retail traders. They're scared. They see the news too much, and they get scared out and they start selling. But then also institutions are like, well, we have too much Tesla in our account. This could be a little bit uncertainty. What happens? What if they get into a longer fight and they take away all their contracts? So they try to cut their risk because a lot of institutions they trade on leverage, right? So they trade on leverage, they have margins, so they want to maintain that margin. So they try to get out of the stock, and then they made up again, and the stock goes right back up again because they're like, okay,
mm.
everything's fine. All right, we can buy it back again. So then they start buying back in again, and then this pushes the stock right back up.
So we got to have the Nvidia conversation, right? I'm no because I mean this is a company who's launched themselves into the stratosphere. It's very high now. I mean, is it do we buy when it's like this?
Not me. I
Uh,
wouldn't, because I like to look for things where like the rewards are in my favor, right? So now if you
mm,
ask me the question in April, right, when Nvidia dropped from like $150 a share to 89, I would have said,
mm,
okay, yeah, 89, I'm a buyer there at $90. But now it's back to like 143. Now I'm like, okay, now I'm not in a buying position. Now I'll probably look to sell it. And then when the next time we pull back down again, then I'll look to buy. So I always like to buy them when stocks have been going down for a few weeks, right? If you're talking about long term. If you're talking about day trading or short term trading, then we could do that any day. It's not a big deal. But like, I wouldn't be buying here. But if you hold some Nvidia, I wouldn't sell it either. I think it's got more to run up. But this would be a position where we say, okay, let's hold on to what we have. Let's not buy more. Let's just keep holding and try to sell it on the way up.
hmm. And how do you monitor all of these? How many stocks are in the New York Stock Exchange?
Tens of thousands of stocks. I
Tens
mean,
of
overall in the
thousands.
markets. But so like every morning, when it comes to short-term trading, every morning, let's say I come on my desk around 9 o'clock, and markets can open at 9:30. So I have 30 minutes, and I use that 30 minutes to build like a watch list. Okay, based on chart patterns, what stock look like it's ready to go, right, or looks like it's ready to make a move, or what's at a good enough level for me to want to buy it. So then every morning I'll scan for 30 minutes, and I'll try to come up with like 10 stocks or so that are going to be sort of my main focus for that day.
Hmm.
And then when it comes to long-term investing or trades that I want to hold on for a few weeks, few months, then same thing. I'll be building a watch list of stocks, and I'll set prices in mind. That the stock comes down there, I'm going to look to buy it, right? So we're looking at chart patterns to make our decision. We're looking at technical analysis. So we're looking at the trends. We're looking at the charts. We're looking at the prior history of the stock, where it came from, where it's going, and then we have a system where we use that to make the decisions on where we want to where we want to go. But it's all guided by charts. So it's not based on how much I love the company. It's not based
Hmm.
on what the company does. It's not based on their earnings. It's not based on any of that. It's literally making decisions just based on charts, because that helps us be unemotional or detached to that trade. I think that's one of the biggest reasons people fail, is they love a stock so much, then they ignore everything else. They're like, oh, this is going to go. I believe in it. Well, that's hope, right? And hope is not a strategy. So we look at systems and strategies.
And are there particular categories of stocks or types of stocks that are more volatile than others?
Yeah, like Tesla, right? Super
Hmm.
volatile stock. Apple, not so much volatile, right? Apple's not volatile. Like usually you'll have the bigger companies that are not as volatile, like IBM, Oracle,
Hmm.
Qualcomm, Apple. They're not really going to be Microsoft, Google, like Amazon. They're not that volatile. But if you're trading something that has a lot of growth potential,
Hmm.
like let's say a Tesla, then it's going to be really volatile. And then the same way, biotech stocks, right? They could have any drug related news. They're going to be really volatile. And then there's going to be stocks that are in the news, right? When GameStop, all this thing was happening. Anything in the news, anything that has a potential for growth or a news could come in, are always going to be volatile.
Hmm.
And there's some like bigger companies that have been well established for a long time: Google, Apple's, Amazon's, Bank of America's, and stuff. Like they're not really going to be that volatile.
And are there certain industries that are more volatile than others?
Yeah,
Like
like
tech, you
biotech.
mentioned a lot of tech. Oh, biotech.
Yeah,
Ah.
biotechnology, pharmaceutical stocks, they are going to be really volatile because they could be dependent on news. Hey, the new drug got approved. Stock's going to be, ripping.
Hmm.
Or the drug did not get FDA approval. Stock's going to drop big time. So like biotechs are going to be really, really volatile. Yeah, typically that, and any new technology, or lower cap stocks, like mid cap stocks, small cap stocks, they're going to be really volatile, and the large caps like Microsoft's and stuff, they're not going to be as volatile.
The thing is, like half of the Fortune 500 wasn't even around 20 years ago.
Hmm.
So how do you? I mean, primarily what we're talking about here, Anmol, is tech.
Hmm.
I mean, any non. I know you. I heard you talk about gold for a while. I mean, any like non-tech, industries we should look at that are not volatile, more conservative.
Conservative would be like your energy stocks, your banking stocks, right? Like, Bank of America's, Wells Fargo's, or even like Costco, Walmart, like the large established consumer products, Pepsi, Coca-Cola,
Mm,
Johnson and Johnson. Those companies are going to be less volatile.
mm,
And then anything that has the potential to be big, right? The reason why, let's say Tesla out of the tech stocks is more volatile, even though it's a big company, is because there's so much potentially in the news, right? Robo taxis could come out. Optimus. There's so much still could happen. So market tries to find what the right valuation, what the right price is. That's why it's volatile, because people are trying to figure out how much it's worth. And then whereas Bank of America, they're established businesses,
Hmm.
they're not going to be doing something revolutionary, right? So the stock's going to be relatively stable and less volatile. Johnson and Johnson, Philip Morris, Procter and Gamble, P&G, like they were going to be less volatile because consumer products. They're not going to come up with some revolutionary AI
Hmm.
thing, you know.
And I guess the Oracle is Mister there in Fargo. Right? Is there a way to? I think there is a way to find out how people are investing and follow what they do.
I wouldn't. I don't like to do that just because we don't know what their plan is, right? So let's say Warren
Oh,
Buffett bought this energy stock, Occidental Petroleum, I think 3 or 4 years ago, and a lot of people jumped in and bought the same thing because Warren Buffett bought it, right? And 4 years later, the stock is still down from where Warren Buffett bought it.
wow.
So do you have the ability to hold on, right? So that's the thing,
Mm.
because for him, that's just one out of the 50 other stocks he owns, right? So are you going to follow all of them? And if you are going to follow all of them, then you might as well just buy Berkshire Hathaway, and you don't have to think about following
Mm.
a stock. So
Mm.
we never want to follow somebody because we don't know when they're going to get out. We don't know when they're what their plan is, how long they're going to hold on, what's their duration of the trade. Because another thing is the filings are delayed. So Warren Buffett buys something today, maybe it'll be in the news in the next filing of the SEC. So and then everybody jumps in and tries to buy the same stock.
Hmm.
But then let's say Warren Buffett
Hmm.
gets out. Well, you wouldn't find out until he files for it the next time, right? So
Hmm.
then it'll be a delay there, and then everybody else is also going to be selling it. So you end up actually going to lose money. So I don't believe in following other people. And Warren Buffett obviously is great, legendary investor. But if you look at most other hedge fund managers, you'd actually lose money following them because they lose money, right? 90% of the hedge funds underperform the market, meaning you're
Really?
better off just buying the S&P 500 and you're going to get better returns than 90% hedge funds out there. If you look at
Wow.
all the people you see on the news on CNBC, but you actually look at what their hedge funds have done, they're actually losing money, right? They
Wow.
just sound smart because the hedge fund world is not about making money. It's all about raising more money, right? They want more assets under the management. They only care about taking their 2% management fee. They don't care if you make money or not. And
Huh.
majority of the people on CNBC are losing money.
Wow. And what does it mean to short a stock, Anmol?
Short a stock is when you're betting against the stock and you're hoping for the price to go down. So as the stock goes down, then you make money. It's just the opposite of buying a stock. You're going to make money as it drops. So what you're really doing is, let's say I'm a broker, right? And I have obviously lots of shares from different customers. Now you come in, you're like, you know what? I think that Nvidia stock is going to go down, right? And you don't want to buy it, but I have the shares. So you kind of make a deal where you say, okay, hey Anmol, how do you have 100 shares of Nvidia? I said, yeah. Okay, can I buy them? Can I sell them? Right. So you sell my 100 shares, right? Now, let's say you sold that at $200 a share. Now the stock goes down $150 a share. You bought back the 100 shares. You give it back to me. So you bought the 100 shares from me. You gave me back my 100 shares. I have my 100 shares, but now you just pocketed the difference from 200 to $50.
Huh.
So you made that money. And now in a brokerage account, it's very simple. It all happens behind the scenes. All you got to do instead of buy, you just click the sell button. Now the stock goes down, you make money, you buy it back, give your broker the back the 100 shares, and you pocket the difference. But the same way, if the stock keeps going up, right, then you're going
Jeez.
to buy it at a higher price and give it back to me. So then you're going to lose the money.
Incredible. So you have kind of 2 buckets the way you work. One to kind of produce your, to make money, to short term, to pay bills, etcetera, to live, and then the other is kind of wealth building. Have
Mhm.
you always had this philosophy?
Yeah, in the beginning, it was more just trading, short-term trading, because I didn't really have that much money when I started to do long-term stuff. So that now I have all different styles. So the short-term trading, day trading that I do every single day, like I did this morning, will be what my income-producing style. The goal is to live off it to pay your bills, right? And then I will take a percentage of that, and then I'll do my longer-term stuff. So I'm also building wealth alongside. And then that account, the goal with the wealth building account is not to take money out of it, it's just to keep growing it into like a bigger account. And the day trading is to your day to day living expenses and doing it as like a full time, pretty much job.
Do you have a broker or are you just doing directly like through an app?
No, you do. Yeah, everybody has to have a broker. So my broker is Interactive Brokers. very popular online, one of the biggest companies out there. But you could do it on anything. You could do it on Charles Schwab, TD Ameritrade. You could open any brokerage account and you could do that in there.
Should people have a when doing this? Does the broker matter? Does the broker make a difference?
For short-term trading, yes. For if you're doing long-term investing, you plan on holding something for a few weeks, months, years, then you could do it on anything. You could do it on a mobile app, on Robinhood or whatever. That's not going to matter. But if you're doing like active trading in and out every day, then you got to have a good broker. Interactive Brokers, one. TD Ameritrade, Thinkorswim, like those are some of the popular ones that you will want to do short-term trading on. Because in short-term trading, speed is imperative. Speed is really important, and also the
Ah.
cost is really important, and you have to have direct market access.
So some brokers are don't have this kind of direct market access, and some do.
Yeah, some of them will just have basic tools, but then there's going to be a little bit of a delay. Like even because in short-term trading, even a 2 second delay is too much, right?
Wow.
So like some of the brokers like Robinhood and stuff, they give people free commissions, but nothing is free in life, right? So we all know that. So they're basically putting your order in a couple seconds late, to try to pocket like a little few cents here and there. That's how they get paid.
Wow.
But yeah, for short-term trading, you got to have a professional brokerage platform. You got to do it on your computer or laptop or something. No professional trader trades on the phone.
Now you can't give stock advice, right? There's a whole set of rules around this.
Correct.
Explain them. Why? Why not?
Yeah, you got to be licensed. You got to have Series 7, Series 60s, different licenses. And then because if you start recommending, now you're a financial advisor. So now you got to be licensed as a financial advisor, right? I'm not a registered financial advisor, so I can't tell people what they should be doing in their own accounts because I'm not registered. So what I do is I just tell them what I'm doing in my own account. Now, whether you do it or not, it's your call, it's your
Mm,
decision, but I'm
mm.
not telling anybody to buy or sell something. I'm just telling, here's what I'm doing in my own account, here's what I'm buying, and then so I'm just giving them what I'm doing. Now what they do with that information is completely their decision.
When looking for a financial advisor, Amno, what should people look for? What kind of questions should they ask?
I personally think that these days nobody needs a financial advisor because
Really?
the technologies that you can do it all yourself because the financial advisor is going to charge fees, right? So your
Hmm.
returns are going to be different, even if it's like a 0.5%, even if it's like a 1% fee, right? But 1% over the course of several years, that's a lot of percentages, right? And
Yeah.
1% is not just 1%. If you compound that 1%, you could be paying, 20 something percent of your returns over a long enough time frame.
Wow.
So you're better off doing it yourself and not having a middleman involved because these days technology is so available. But if you are going to look for a financial advisor, then look for somebody who's a fiduciary. A fiduciary financial advisor's responsibility is to give you the best products and the best decisions, right? And then they would typically just charge you like a flat fee or something to do that advice. Whereas other financial advisors who are not a fiduciary, they are basically just glorified brokers. They get paid to recommend you products, right? Because they get
Hmm.
commissions. They're just salesmen, like insurance agents, right? So they're going to recommend based on where they get the most commission, right? So that's why you got to look for a fiduciary financial advisor whose duty is to recommend you the cheapest and the best possible options.
What's the process to get these serious license and become a financial advisor? Is it long? Is there exams?
No, it's relatively easy. I mean, take a few courses, you study online, you take an online test, and you could get certified. It's not that hard. But then when you do get financial as a license, then you got to go by all of their rules. Like just like a lawyer has to go through all the rules they got to follow. They have a process they got to do things by. Then financial advisors, you're regulated. You're overseen by regulations. So I think that's a different bucket, in my opinion.
Born in India, you eventually, I believe, went to London and university, and you were looking for jobs, internships, and everybody was getting them, but you weren't. You got upset, and it was actually good for you, I believe, because you kind of branched out on your own.
Oh, absolutely. I mean, I remember that too. Like I always wanted to get a job. Don't get me wrong, because I saw my family is an entrepreneurial family, business owners. So I saw growing up like the stress like in the family because oh, 1 month is a great in business, and the next month not so much. Oh, then the taxes thing, then all of this stuff. I was like, man, this is a lot of roller coaster. I would just love to get a job because then I know, okay, here's what I'm getting every month, and I can just plan my life around it. There's no uncertainty. Whether you do good at a job or bad at a job, you're going to get your salary. So I wanted to do that, and I applied everywhere. Got a few interviews, got a few different options, but none that really sat with me, or none that really offered me any position. Like I got into the interview stages in a lot of them, but never really got a call back. And then that was kind of my time to say, okay, wow, I am never going to rely on anybody in my
Hmm.
life to give me a job, because even if they give it to me, well, they can take it away anytime. And we saw that in 2020, right? How many people had amazing jobs? They thought, oh, this is for sure a secure job. Or you could
Hmm.
have even had a physical business, a restaurant, and they also got shut down. So then, I mean, that even made me even better about my decision many, many years ago, that, wow, you can't rely on anybody to give you a job, because even if they give it to you, they can take it away. With trading, I mean, nobody can take that away, right? So I think that's the
Hmm.
best part. And yeah, it definitely was worked out in the right way. Because had I got the job, I'd probably still be there trying to climb my way up in the company and playing
Mm.
that rat race, where this path led me to a completely different path that was not even in my radar at that time.
Hey, Joey Pinz here. Want to take your podcast experience to the next level? I'm excited to invite you to become a YouTube member. It's the absolute best way to support the channel and enhance your connection. Join our amazing community and unlock the incredible perks, custom loyalty badges, exclusive emojis, and priority comment replies. Your voice will always stand out. Be the first to watch new videos with early access, receive special membership shoutouts, and get exclusive behind the scenes photos and updates. Dive into content available only to our members, special videos, deep dives, and insider perspectives. Engage directly with me. Suggest podcast topics you want to hear, and even get personalized video shoutouts. Hit the join button right now and become part of something special. Let's build this amazing community together. I can't wait to welcome you as a new member. Join the Joey Pinz family today. And why come to the States and do it here? Why not do European or Asian markets? Or maybe you
Uh,
are.
yeah, back in that day, I mean, now, even now, like US has the best technology, the best brokers, the best softwares, the best technology, whereas other companies are still way behind in that department. Like the
Really?
tools aren't really there to do what I do. I mean, nowadays, I guess you have it, but it didn't exist like, 15 years ago. There weren't many softwares or ability to do that in international markets. And then, but again, US market too, I could trade that from anywhere in the world, and I travel and I trade from all around the world. But why I
Mm.
chose US was primarily because of the time zone. Because if I'm trading the US market, well, if I'm in Asia, well, I'm going to be trading at 9 at night.
Mm.
You can't really go
Mm.
out for dinner or anything because you're working 9 at night till the morning hours,
Mm.
and then in the morning you're sleeping. Or if I was in London, then the stock market I'd be trading from, let's say, noon or 1 p.m. to like 5 6 p.m. The whole day is gone. It's not a great
Right.
living. Whereas in New York, I could do it normal human hours from 9 a.m. till like 11 or 12, and I'm done at noon, and I could just like enjoy my day. So it gives you a good work-life balance to do it in the right time zone. Now, if I was trading
Mm.
the UK or Europe market, then I'd want to live there because I want to trade morning like normal people.
And are those markets more volatile? Are they consistent? Are they what's different between those markets in Europe and in the US?
I would say U.S. markets are the most active. It has the most volume. It has the most number of people trading. It has the most money in the
I
markets,
see.
because the whole world looks at stocks like Tesla, Micro. They're like global stocks, right? The whole world looks at them. Like if I ask people, name me like 20 best companies in London, even I couldn't name them right now,
Mm.
right? Whereas the whole world knows Amazon's, Google's, Tesla's, Microsoft's, Apple's. The whole world trades those stocks.
Let's talk about capital gains. Recently the news, I've like some states say you don't even have to pay it. Did I read that correctly?
They are trying now. Yeah, I mean that would be awesome. I would love that. Because taxes are the biggest expense for any person, any
Yes.
trader out there. So that, I mean, I would love that. I'd move to that state very quickly if that was to happen. But yeah, I mean they are talking about it. I'm not sure if they're going to be able to do it. I mean, some states are doing it. That would be awesome if they do it, and you're going to see the stock market go much much higher if they do that, because then people would just want to keep their money in there.
Oh, that's interesting. I didn't think of that. So I think South Dakota was one. I'm not I
Yeah, I
some of these.
saw. Yeah, a
Yeah.
couple of states. I don't remember the top of my head, but a few states were talking about it.
But certainly the less populated ones that are
Hmm.
desperate for for population. Uh, but I thought capital gains was federal and not state.
Yeah, I think some states have them, but yeah, it's mostly federal. But some states have like additional gain. Like if you're living in New York City, you're paying an extra like income tax and capital gains. I mean, it would be nice to do that. If that were to happen, I would love it. I'm thinking about moving from New York to Florida, just for tax purposes too. Because to live in New York, you pay an extra 8.25%. But if you're in Manhattan, you're paying an extra 3.2. So you're basically paying 11 something percent extra on top of federal. So if I move to Florida, I mean, I don't have to pay that 11%. So I'll save a lot of money. And that's why I'm down here in Florida right now looking at a few properties.
And well, I made that move a year ago. I'm from Connecticut and I came down to Tampa, the other side. And
Nice.
yeah, there's no income tax. And yeah, it's absolutely amazing. And now the governor is actually talking about removing property tax,
That would
which
be
would be,
amazing. Yeah.
yeah, I don't know why. Yeah, people would flood here. And of course, you could play, golf in the winter, which is kind of nice, but, but let's go back to taking the emotions out of stocks. I mean, when do you have clients? Do you actually talk to some do you coach anybody?
Yeah, at my company, livetraders.com. So we offer training, education,
That's
courses
right. That's
for
right,
people looking
courses.
to learn the stock market. And I
Yeah.
also live stream myself trading every day. So, like right before we got on the call, I was trading in our live trading room. So, I would live stream myself trading where I talk them in real time on what I'm doing. Okay, I just bought this, or I just shorted that. Okay, I'm getting out. So, like, I kind of walk them through so people can see me do it. And then while they see me do it, maybe they can start learning and see, okay, why I do certain things, and they can also see what I'm teaching them in the courses. I'm actually applying the same stuff like in
Mm,
real time in front of them. And yeah, I think that's the best way to learn, because not just about winners. I want people to see how I handle myself when I'm losing. That's really important,
right.
right? When I
Right.
decide to get out and take a small loss, whereas an indisciplined trader will keep holding. Maybe it'll come back up, right? And I don't do that. If something breaks the trend, like I'm out, right? And so I think really important for people to see me do that on how I'm unemotional and detached to the outcome, whether it's going to be a winning trade or losing trade. For me, it's all
Mm,
about a sample size. It doesn't matter if the next three trades I lose. What happens after a series of 100 trade sample size, right? So that's
mm,
what we're looking at in trading. It's not about that one stock or that one trade. How do I do bigger sample size? Like a casino, right? You could go to a casino today, you could win $1 million. They're not going to mind. They're going to give you the money. In fact, they're going to say, here, keep playing. Here's a free stay, free dinner. Keep playing. Here's some free drinks. Keep playing, because they know in a long enough sample size, you end up going to giving it back, right? So I
mm.
think that's what we are doing as traders. It's all about a sample size. So we're trying to be the casino rather than the player.
Yes, sir. I did see your courses. Then when you're coaching these people, what's the biggest myth you gotta dispel?
The thing is, I mean, not really a myth, but like it's more emotional than anything else. So
Mm,
it's all about controlling your emotions and being disciplined. When you buy a stock and you say, okay, if the stock I bought it at $30 a share, if it goes down to $29, I'm going to get out and take a small loss. But then be able to do that, be able to get out. Not, I
mm,
think it'll come back up. Let me hold. Let me buy more. No, 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 no. Once it breaks the price, we're out, right? And so
mm,
teaching emotional control is the hardest thing, because learning trading is not hard. Like you spend 3 days with me, I can teach you everything you need to know about trading and technicals and charts. But can you do it when I'm not there, right? If you set a target on the stock, if Tesla goes to 400, I'm going to sell it. And then Tesla went to 470, and some people still didn't sell it because I think it's going to go to 1,000 now. Oh, no, 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 now you're hoping
mm,
again, right? So be able to sell it at 470, then it drops to 200, buy it back, it goes back to 400 or something. Be able to sell it. Don't get married to a stock, as we say. We say trade it, don't date it. you know, it's a saying in trading. So we got to be able to take our profits, and we got to be able to take our losses too. And that's what I wrote about in my new book that just launched actually yesterday. It's called Mastering the Trader Within, on Amazon. We just hit the number one bestseller yesterday on
congratulations.
Amazon there. Thank you. So that is all about the mindset required for trading, because that is the biggest difference in trading. Because most people come to trading, they've had a previous job or something, right? So what happens is, growing up, like your parents are going to tell you what to do. Then you go to school, your teachers will tell you what to do. Then you go to college, your professor is going to tell you what to do. And then you go get a job. Your manager, your supervisor, your boss is going to tell you what to do. In trading, nobody's going to tell you what to do. You got to tell
Mm,
yourself what to do and be able to actually do it. And in real life, if a boss tells you to do something and you don't do it, guess what? There's consequences. You could be
mm,
fired. You could be laid off. In trading, nobody's going to tell you what to do. You got to coach yourself what the right thing to do is, and you got to set accountability structures in place. What happens if you don't do what you said you're going to do? So teaching the emotional control is the biggest thing in trading, because learning trading honestly is not hard. Like really, I'm not even saying that facetiously. Like it's fundamentals of the markets are very similar. Like you take one of our courses, 20 hours of video lessons, you got everything you need to know about the market. But
Hmm.
now, can you apply it? Can you do it? Can you stay disciplined? Can you be unemotional? Can you be detached to the outcome? That's the big thing.
Hmm. So you create a set of rules and you stick to them no matter what. You buy a stock, if it goes to this price, you sell it. If it goes up to this, you get those rules and you stick to it. You take the emotions out of it no matter what. You stick to the plan.
Exactly. Like again, going back to casino analogy, if you go to casino and you're playing blackjack and the dealer gets 16, right? Well, it has to hit. The dealer's never going to be like, "Oh, I'm just going to stop at 16, I think." No, no, no. Don't use your emotions. They have a rule that, okay, under 17, you got to hit no matter what, right? And they follow the rules because they know in a big enough sample size, they have an edge, right? That's why we call it trading with an edge. So in trading, I know that if I take 100 trades, I'm probably going to win on 60 or so on them, and I'm going to lose on 40 of them, but I'm okay with that. I just trade the bigger picture. It's not about what
Hmm.
I do today or this week. How do I do at the end of the quarter? How do I do at the end of the year? Right? That's the big thing. It's all about sample sizes and having the odds in your favor.
So stock trading, Anmol, is 100% science. There's no art.
No, it's definitely not science. It's art too in it, but it's a combination of art and science. The art happens in your ability to decipher, is this the right time to get in or not, right? That's the
Ah.
art part. And also, there might be thousands of stocks. Which one to buy, right? That's all art.
Hmm.
But the process of statistics getting in your favor, that's kind of the scientific part, is getting
I
the
see.
ratios in your favor, getting the
I
odds in
see.
your favor. Because again, it's simple math, right? I'll give you an example. Let's say you buy or sell something and you have 50-50 chance, right? You could throw a dart on the wall on something, the dart lands on Microsoft, and you buy Microsoft because the dart landed on it. Well, you have 50-50 odds. It could go up, it could go down. So inherently, we all have 50-50 odds. So all we're trying to do is how do we get that 50 to 60 by using some art to it.
Hmm.
So an example of that math would be, let's say you take 10 trades, okay, and on 5 of them, you lose $1,000 each. So you lost $5,000. But on the other 5 of them, let's say you make $2,000 each. So you made $10,000. Well, at the end of 10 trades, you're going to make $5,000. So
Hmm.
if we just ensure that all our losers are exactly the same, let's say all my losers are $1,000, minus 1,000, minus 1,000, minus 1,000. But let's say I ensure all my winners are plus 2,000. I only need to be right 38% of the time.
Hmm.
That's it. It's math, right? If I get 40% right, so I could lose on 6 of them and I only win 4 of them, but 4 of them made 2,000 each, so I made 8,000. 6 of them I lost 1,000 each, so I lost 6,000. Net, net, I'm going to make $2,000. So
Hmm.
you only need to be right 40% of the time. And I just said you could throw a dart and you'll have 50-50 odds. So it's just about making more on the winners than the losers.
Hmm. You can't use any emotions. So, I mean, does that bleed over into your everyday life when you have to make decisions on things that aren't stock related? I mean, how do you kind of keep yourself grounded in that kind of mental state in your profession?
Yeah, that's the biggest challenge, and I'm not perfect. Like I still have my moments where I get
Yeah.
off course, or like the emotions seek back in. So I've made mistakes too, and that happens. But the key is, a professional trader might only do that like 1 out of 10 times, let his emotions take over. A novice trader will be trading mostly on emotion. So that's
I
the
see.
difference. Like if I mess up 1 or 2 times here and there, that's okay, right?
Hmm.
Large enough
Hmm.
sample size, messing up like 5-10% of the time, not a big deal, but most traders mess up a lot of times. But if that's the best thing, this emotional discipline helps you in all aspects of your life. Because when something happens in my business, I can be unemotional. I'm like, okay, let's take a look at the stats. Let's look at the facts here. Okay, this employee did this. I didn't like it. Okay, what could they do better? Let's communicate that to them, and let's set structures in place, right? So I think being unemotional is really important, because then that helps you see things just as information. Like I'm not
Hmm.
having my own bias, or I'm not getting swayed by my emotion. I'm looking at everything as just data and information, and then using that. Now, it probably doesn't help in relationships. My ex girlfriend used to say
Hmm.
all the time, "Oh, you're just like always so calm. You're just always so emotional," and I'm like, is that a bad thing? It's like, yeah, but like you're just so calm always. So it didn't really help in that regard.
Mm,
But I could, maybe not in a short-term relationship, but even imagine if you're married or you got kids, and just to be able to be level-headed is a really good thing to have in all aspects of your life.
mm. Define a perfect day.
Perfect day. I mean, perfect day for me is whatever I thought I would gonna get done the night before. And if I do that the next day, it's a perfect day. So
Oh.
every night I plan my day the night before. Most people wake up and then they think, gee, what am I gonna do today? Oh, what's in my you've already lost the day, right?
Hmm.
You already wasted time waking up and thinking what you're gonna do. I write down the night before. If I just do these 6 things tomorrow that are gonna move the needle in my life, that's a perfect day. And if next
Wow.
day I do those 6 things, I call it a win, right? If I felt somewhere, then I see, okay, what do I need to improve, or how do I get it done the next day? And that's kept me really focused, because all I do the night before is, okay, what are the 6 things that need to get done, the more important things that'll move the needle in my life or in my business, and that's it. Then I don't judge myself based on all the 20 other things that I didn't do. As long as I did the 6 things, it's the perfect day. So most people
Mm.
can just think about it like that. Think about what if you had your perfect day, what would that look like,
Hmm.
right? So for some people, it'd be like, if I wake up, if I work out, if I get my work done, or if I get my task list done, if maybe I take my kids out somewhere, or if I have a nice dinner with my wife, or I do anything I want to get done, meditation, journal, whatever is in your list, or playing golf, right? Make that perfect day, put it all on like a piece of paper. Then you take all of those things on a paper and you assign them time slots on your calendar. Well, the next morning you're going to have that perfect day,
Mm.
right? As simple as that. But most people never plan that out, and then even if they plan that out, it just remains on a to-do list, and to-do list will never get done. Everything has to have assigned time slots, right? So for me, okay, 9 to 12, I'm going to trade. I'm going to do my live stream. I'm going to do all the things with my students. 12 to 1, I'm on here with you. I'm going to chat, do a podcast. I get off the podcast. I'm going to go check out some properties in Fort Lauderdale, right? And then I'm going to come back. I have a dinner with one of my clients. That was the day's already planned, and I'm going to have
Wow.
that day. So,
What's your stance on crypto, Anmol? I need to ask.
crypto, it's like investing in the early stages of the internet,
Hmm.
right? It's like the early stages of internet, but it's very early. It's almost like buying a penny stock right now. Now, penny stock could end up becoming the next Amazon, next Microsoft, but some of them are not, because there's so many cryptos out there, right? There's like thousands of different coins that you could buy, and majority of them are going to be like it was in the early stages of internet. When internet came out, any company with the internet or .com would we got the .com bubble, everything went up. What happened when it bust? Only few winners emerged: Amazon's, Microsoft's, Google's, Apple's, and then all the other companies destroyed. That's what's going to
Mm.
happen in crypto by the time 2030, in my opinion, is that we have thousands of different coins here. There's going to be some sort of a bust. 90% of the coins are going to go away, and then going to be a few winners that are going to come out. So it's about finding the right winner. For most people, I would say, probably not a good investment, because it's not a sure thing, right? And technology, the thing with technology is even the disruptors can get disrupted by other disruptors, right? MySpace was the first one, right? AOL, MySpace, great technology, great everything. But then what happened? Faster, better technology came. Facebook came in, Google came in, and now MySpace is gone, Yahoo is gone, everything is gone, and the new winners came in. That could happen
Mm.
with Bitcoin and other things too, right? There's better, faster, cheaper technology out there. What's going to happen? Nobody knows. And I think anybody who's saying they know, they're lying. Nobody knows.
Mm.
I mean, I have crypto too. I have this crypto coin called Algorand that I'm invested in. But again, that's going to be a small percentage off like my overall investment funds. Majority, I'll still have it in stocks, because that's a proven thing, and I'm actually
Mm.
buying companies that do something. Whereas a coin could be worth something today, could be worth nothing tomorrow, or it could be powering the financial systems of the world, and now it's going to be
Mm.
the next big thing. But I think it's still very early. I think 2030 is where we're going to find out where the winners are going to exist.
Why that number? Why 2030?
I think because right now, this last few years, we're all just hype, and then now we're finally getting some regulation and some clarity going
I
on.
say.
So by the end of, I guess, this term, and what happens with the next administration, are they going to keep that going? I think that regulation, clarity, and all of these things are happening now. People are building things on it, so it's a very slow process, but it's getting there.
We always hear to diversify our portfolio. Is that important?
Very important because you never want to put all your eggs in one basket. But
Hmm.
what if that basket goes away? What happens then? Right? You lost it all. Now you're gambling. If you're going to put it all in one thing, that's again hope, emotion. You believe in something.
Hmm.
We don't know. Nobody knows. So putting all the eggs in one basket, I think, is a recipe for failure. That's too much risk. You're betting on your financial future on this one thing. Not a good idea. But when you have diversified portfolio, well, when if one stock goes down, well, the others might go up, and you're gonna slowly get your returns, right? You're gonna get predictable returns if you just buy the Nasdaq, right, or you just buy the S&P 500. Don't even buy individual stocks. Well, S&P 500 has 500 stocks. You're getting diversification in there, and it's proven that if you put your money in there every year or every month on a dollar cost basis, then your money is going to double every 6.7 years without you needing to do anything. So I will just take that sure thing. And then traders like me can bet because we've trained, we've done our homework, we know our odds, we know our statistics. But average people, they have no concept of odds or statistics or any of that, so they're going to end up making wrong decisions.
Hmm. Anmol, has there been anything in the last month or so you changed your mind on?
Hmm. Great question. Anything that I've changed my mind on? I would say moving, right? Like I'm thinking about moving from New York
Ah.
to a different place. And for the longest time, I said I'm probably going to always live in New York. I'm always going to live here because it's a great city. Everything is in walking distance. You can walk literally everywhere, and it's a great city. It's a lot of people, and I thought I'm never going to move. But then as I got older, I'm like, okay, I'd love to have more space. I'd love to have less
Hmm.
taxes. I'd love to have, like a home rather than like living in a penthouse or a condo. So that's something that I changed my mind on. Yeah.
Hmm. So I started my business in the 90s, a little bit older than you and Mall, and I was working way too hard in the beginning. I opened up a tech company and, 12, 14 hours a day of putting my health in the back seat. Next thing I know, I'm in front of the doctor, and she tells me I'm at 340 pounds.
Mm,
She's like, if you don't lose this weight, you're not going to see your daughter graduate. My daughter was just born.
no.
Scared the life out of me. I'm pissed off. I'm driving home, punching the steering wheel. So I spent the next 6, 7 months, lost about 120 pounds, kept it off. It's not a finishing line, it's a lifelong changes you have to make. And so when I tell people this story, they say, what's your secret? How'd you do it? And I said, well, there's no secret. Discipline. That's how I done it. You mentioned it a couple times in our conversation, but specifically, how does discipline play a role in your life, Enmal?
Huge, because without discipline, nothing gets done. Like literally, because I could give somebody the best strategy in the world, but the strategy is only as good as your ability to actually stick to it and follow it. Right?
Hmm.
If there's no discipline, even the best strategies can fail. Or same thing. I had the same situation as you like a few years ago, and I'm still on my health journey now. But last year I was 40 pounds more than what I am now, right?
Wow.
And it was the same thing, and I couldn't get it done. I was like, wow, I can do anything in all aspects of my life, but when it comes to this thing, I'm not able to do it. But then it's just about like doing it. And I realized if left on my own devices, like I am not going to work out, right? Things
Hmm.
happen, life happens, I'm not going to work out. Then okay, what can I do to ensure that gets done? Because I need to get it done. That has to
Hmm.
happen, right? Otherwise, what's the point of making the money if my health is a mess? So then I said, okay, if left on my own devices, workouts are not going to happen. So what do I need to do? Okay, let's get a trainer. He's going to come in my house the same time, same day of the week. And if he's at my house, well, I'm not going to send him back. The workout's going to get done. So then I had to put things in place. So rather than being hard on myself on saying, why can I not do it, man? I keep failing. I said, okay, no, no, no. What am I going to put in place to ensure that I am not left on my own emotions? Because if left on my
Mhm.
own emotions, not going to get done. So you have to take that out and put systems in place. Same thing with business, right? Things have to happen. Oh, my employee, we were supposed to promote this thing today. Oh, we can't because the employee didn't deliver the right graphics in time. So
Hmm.
now I know, okay, next time if I'm going to promote something, give him a week heads up and say, this is the deadline I need it by. So then I put things in place to ensure that's going to happen again. So all you got to do in life is think about what can I put things in place to ensure that that gets done. I think that's the biggest thing in life.
Hmm. Growing up in an entrepreneurial family there in India, was discipline talked about, or was it just kind of exemplified?
It was definitely talked about. I heard it all day long.
Really?
I
Did you?
heard it all day long growing up. Indian family, nothing. Nothing's good enough. Like you got to get
Mm.
it done. or why are you doing this way? It was very strict family, I would say. So I mean, I saw that it was like just expected of us. But then when I left for London, you kind of rebel against it too. Because now you have all the freedom that you never had, and then
Uh,
you do all the things that normal college student would do, and then you realize, okay, there was all with a purpose, and then you end up getting back to what they were telling you all along. But yeah, discipline is extremely important because nothing works without that.
hmm. What motivates you, Anmol?
A lot of things, like first thing is like I have a image of myself, right, in my mind, and if I'm not matching that image, that motivates me to keep going, right? Because I think about myself in a certain way, but if my identity is here, but it doesn't match it, then I get frustrated a little bit. Then that
Hmm.
motivates me that I got to take action. Why am I overweight? Like I need to get back. Like those things promote me because in my mind, my identity is here, so I got to match that identity. So that keeps me motivated, but also to create a life that I envisioned for myself all along growing up, right? That keeps me motivated. I wasn't the most popular kid. I wasn't the most social kid. I was very introverted, and all of that. So for me, I was like, okay, when I grow up, I'm going to achieve my goals. I'm going to get it done. I think that keeps motivating me a lot. And then nowadays, when I see other students that I'm work with and they're achieving success, that motivates me even more because now I find that I'm not only just doing it for myself and reaching my identity, but I'm helping other people get to their level of identity. So that gives me a sense of purpose.
So, given that motivation, how do you measure success?
I measure success based on are you when you are sitting by yourself, how do you feel about yourself?
Hmm.
If you think about yourself and you're happy with yourself where you're at, that's satisfaction right there. But if you know that you could do better, you know that you're made for more, you know that there's a version of you out there that you're not getting to, then there's satisfaction. Not being satisfied is a good thing, because then in a spiritual sense, like God has given you this vision and you're not doing it, then I want to do that. Right? I want to do all the gifts that have been given to me. So I think
Hmm.
that keeps me motivated, and that's how I judge success: is how do you think about yourself when you're by yourself? Are you feeling good about yourself? If so, that is true success. If you know you can be better, if you know you can do something better, well, then do it. Let's do it. That's a vision
Hmm.
from God or whatever you believe in.
Want to show your love for discipline, inspiration, and the Joey Pinz podcast? Now's your chance. Introducing the brand new Joey Pinz merch store, where style meets discipline. Choose from premium apparel, cozy hoodies, stylish hats, durable bags, and your new favorite coffee mug, all featuring the iconic Joey Pinz logo. Perfect for podcast fans, discipline enthusiasts, or as unique gifts for friends and family. Every purchase supports the Joey Pinz Discipline Conversations podcast, helping us continue to inspire greatness and promote positive change. Visit joeypins.com/store today and wear your discipline proudly. Joey Pinz merch. Wear it, share it, and live it. Oh, very cool. I was excited when we set this up. You traders, you're fascinating to me. You're entrepreneurs. You're your own. You control your own destiny, but you take it a whole extra level. You got these great courses. You've got people that you coach. You do live streaming. Here's what I'm doing. Get a plan and stick to it. Very, very cool. I applaud you. Congratulations on your book. If anybody listening, watching, how can they get in touch with you?
They can reach me out on Instagram or X, Twitter. My username is the same on both of them. It's Delta90, DELTA9NETY. It's spelled out 90. I got it when Instagram just came out. So it's like, don't question me on the username. It's going to be the same across everywhere. I was in college when I started, in school, I think, when I started it. So we're stuck with Delta 90 now. But also my website, unmol.net. You can learn more about me there. Or if you're into trading, then you could go to livetraders.com. And yeah, I mean, I'd love to give your listeners a free copy of my book, Prepping for Success. They could just go to go.unmol.net, and they can just cover shipping. And wherever in the world you are, we'll send out the book to you.
I thank you so much. And next time I'm there on the east coast of Florida, maybe we'll go get a cup of tea.
Absolutely, yeah. Hopefully, I'll pull the trigger on the property by Monday. I'm hoping
You
so.
will. You
Yeah.
will. You will. Manhattan is great, but yeah, once you're down here and it's December and it's November, and when the time changes in November up there and it gets dark at 4:30 and it's still light here till 7. I mean, it's the summers are hot, but it's good. Anmol, thank you so much. You have a great day.
Thank you. You too. It was great chatting with you.
Thank you for listening and or viewing Joey Pinz Discipline Conversations. Please share this episode with one or two of your friends who you think may benefit from the episode. Our website, www.joeypins.com. There you'll find lots of resources and you could join our mailing list. Please follow us on all our social media, Instagram, Twitter, and Facebook. Podcast information, the video version of our podcast is on YouTube. Please subscribe. Audio is on all major podcasting platforms. Please follow them. And if you like it, please consider giving 5-star rating. Would really appreciate that. Thank you again for listening or watching Joey Pinz Discipline Conversations.